Ladies and gentlemen, welcome back to the channel. Tesla stock hit a new multi-year high today at $377.52 per share. Now here in this video, we will break down exactly what's going on with Tesla, the broader markets, and all of your Tesla stock news that you need to know, including the jobs report that came out this morning that did have an overall positive effect on our markets. Just look at your portfolio and you're probably heavily in the green today. So first and foremost, let's start with the jobs report. And now, if we take a look at the jobs report, we added 227,000 jobs in October. The prior month was revised up to about 36,000 jobs from 12,000 jobs prior. So it looks like the labor market is stronger than we thought it was, with this estimate beating the Dow Jones consensus estimate of about 214,000. So you came in a little bit higher than that, and that's good news. Why is that good news? Well, simply put, markets are pretty much priced for economic perfection. If you get a bad jobs report or a growth scare or something along those lines, we're not priced for that, right? So the fact that this jobs report showed the economy is doing good is good news for stocks. Now, it was not all great because the US lost 111,000 full-time jobs and 268,000 part-time jobs. So not exactly sure how we got to a positive 227,000 jobs number, but it looks like other metrics are not as strong. So headline number looks good, but if you dig into this report a little bit more, it does not look as good as you would expect. And this is really giving the Fed the excuse they need to cut rates. We're now sitting at an 89.0% chance of a cut December 18th. Yesterday, the odds were 73.3%. So odds are massively jumping today that we will get that cut December 18th, and that is especially boosting the internals of our markets. You're seeing a broader based market rally today. The Russell 2000 doing well, up 0.39%. The Nasdaq up 0.66%. S&P up 0.2%. The Dow is down about 0.25%. But take a look at the VIX here. The VIX is really seeing a de-risking moment today, down to 12.96, which is down about 4.28% today. So a lot of people were fearful heading into this jobs report, myself included. There was a lot of risk with this jobs report. And now that it's gone, we're really de-risking. And that could be good for an end of the year rally. And it does look like the breakdown of job creation looks pretty good. Healthcare and social assistance, 72.3 thousand. Leisure and hospitality up 53,000. Government up 33,000. Professional and business services up 26,000. Manufacturing up 22,000. Financial activities up 17,000. Construction up 10,000. Transportation warehousing up 3.4 thousand, mining and lodging up 2,000, wholesale trade up 1.6 thousand, information at 0, utilities negative 100. The only sector that was really negative in any kind of material way was retail trade. That was down 28,000. But overall, markets are taking this as good news because it's not too hot, but it's also, not super bad at the same time. We also had Michigan consumer sentiment that came out today. Headline number came in at 74.0. The estimate was 73. So you beat there. It looks like 5-year inflation expectations came in at 3.1%. Last month, it was 3.2%. This was in line with the estimates, so a month-over-month decrease in longer-term inflation expectations. That is good. Consumer expectations did plummet. We were expecting 77.3. It came in at 71.6. Now, current conditions skyrocketed. So current conditions came in at 77.7. The expectation was 64.1. So expectations versus current conditions, something is very weird going on here. But that current conditions skyrocketing is definitely good for markets. 1-year inflation expectations also went up a lot to 2.9% from 2.6% previously. So a bit of a mixed bag here. Overall, I would say as a net positive. Now, some of the big news today includes Guggenheim that has increased their Tesla price target to $175 from $156, but they maintained a sell rating. We also see Fubon that raised their Tesla price target to $472 per share from $330 per share. This is now the highest price target for Tesla on all of Wall Street. Some of the big news yesterday was Bank of America's analyst John Murphy says that he recently visited Giga Texas and that Tesla gave him a ride in FSD's supervised V13.2. He said, quote, "It was incredible. Good though, some very challenging scenarios." John increased his Tesla price target to $400 per share yesterday. Take a listen to this clip on CNBC and specifically what he just said about Tesla.
What questions did you principally want to have clarified by going down to visit the facility, and what left you more optimistic?
Great. Well, thanks for having me. I'm an old school gearhead. I've been doing this for over 25 years. I love seeing factories. So that was the first thing really to see the Austin facility for the first time. So that was great. Seems like it's a really good facility. But I guess probably more important than that was our test drives of FSD in a Model Y. I was in version 13.2, and it was incredibly good through some very challenging scenarios. So that was incredibly impressive. And then the potential for FSD to continue to grow as a percent or a penetration rate to continue to grow over time, which will create recurring profit and revenue streams off these vehicles, which will be far higher than the initial hardware sales. And I think that really is where we got pretty optimistic about what can happen here. And our $400 price objective, our updated one, is the first stop. We'll see how this ultimately goes over time and how things are executed over the next year or two.
Yeah, I was going to say, I mean, it's added like $500 billion in market cap in a matter of a few months. And so the big question there is, the pacing of whatever financial benefit is going to be coming through, whether it's full self-driving and the robo-taxi business, and then also just actual here and now demand for EVs.
So I guess there'd be three things I'd point to. First, the launch of the low-cost vehicle next year. That's going to be very important to get out there. The market opens up very significantly in the U.S. and globally, sub $40,000. So that vehicle coming out sub $40,000 is going to be very important, and hopefully that'll be X the $7,500 IRA credit, which is at risk. I think the other two things that are really important is that the potential for Optimus and FSD or full autonomy to really take off are important. And when you kind of sort of dare to dream, like a lot of the growth investors in this name do, I mean, you got a $100 trillion global GDP number, 50% of that is labor, right? So that's the TAM for Optimus. How much of that it actually takes or adds to is huge. And then on the FSD side, you have about 10 trillion miles driven each year on the roads around the world. If you capture 50 cents or $1 in each of those miles, your potential profit is tremendous. So I think, as you look at the two vectors that are going on Optimus on the labor side and FSD on the autonomous side, there's really huge opportunities. And then just one last real thing, the speed of travel has not changed in the better part of the last 80 years. If you're in an autonomous vehicle that can't hit something, there's the potential for the speed of travel to go up significantly. And then all of a sudden you have structural economic growth like the US and the developed markets have not seen for more than 50 years.
Yeah, I mean, obviously, you're correct to mention just sort of the dare to dream aspect of that's what this investor base is when it gets excited when the stock goes up. Those are the things that come into play. You do also raise the notion, though, that it has an incredibly low cost of capital based on the stock trading at 100 times earnings. Do you actually think that they might be looking to raise more?
Well, I mean, growth investors are involved here, and they want to continue the company to continue to push the growth envelope on the top line. So raising 5% of the equity, which would be about $55 billion right now, would accelerate sort of the deployment of what they're doing on the Dojo side as far as the systems that are necessary for AI on full self-driving and for Optimus. And the reality there is, I don't think anybody would really bat an eye at a 5% dilution. That would be the largest capital raise in history, by the way, but really not that big a deal for a company with a $1.1 to $1.2 trillion market cap.
According to a new Consumer Reports survey, Tesla has the third highest owner satisfaction rating. You could see that Tesla also ranked number 2 in ownership cost, and number 2 in most satisfying driving behind Porsche, and number 2 in cabin storage. CEO of Replit on X says Tesla's FSD has gotten so good I basically stopped driving. I just don't know what to do with my hands now. Tesla commented on this and says it's time to perfect your air drumming. Hyundai has revealed the fully redesigned 2026 Palisade. Now, option activity for Tesla stock today from hedge funds and institutions is very, very positive. You have 226 different trades totaling $229.23 million with a positive order value of 93%. 93% positive is an insane number. Okay, pretty much everyone is bullish on Tesla right now. If we take a look at volume today, call volume is 64.64% calls and 35.36% puts. So a little over a 2-to-1 ratio, 2 times as many calls versus puts. So definitely looks good as of today. People are very bullish in Tesla, positioning for the stock to go higher. If we look at short interest of free float, that sits at 2.72%. You have $28.05 billion currently sold short in Tesla. That's the dollar amount sold short, totaling about 76 million shares or so. You do have about 243,000 shares today that are being covered on. So short sellers, they want to get out of their Tesla short positions, and I don't blame them heading into year end. Now, if we take a look at sentiment for Tesla today over on StockTwits, you're coming in at bullish at 55. Yesterday, you were extremely bullish at 79, but given you were so bullish yesterday, you almost expect to see a fall, even if the stock is green like it is today, because sentiment can only be so bullish. Message volume yesterday was high. Today, it is still high at 60. These numbers unchanged on a day-over-day basis. And participation ratio today is coming in high at 55. So all looks good there. If we take a look at Google Trends data, something we do want to be paying close attention to, I think, in Q4, it is kind of trending lower, which is not a great thing to see. The Cybertruck at 52, the Model Y at 33, the Model 3 at 26, the Model S at 11, and the Model X at 10. So things could definitely start looking better there, and we would not be disappointed with that. But it's not terrible. It just doesn't look great right now. Worldwide search trend data, same thing, kind of trending lower. Cybertruck at 55, Model Y at 45, Model 3 at 38, Model S at 14, and the Model X sitting here at 10. CNN's Fear and Greed Index for the first time in a while is now in neutral territory at 54. Yesterday, it was neutral at 55 when you closed the day, but for the most part of the day yesterday, you were at about 57, which was barely still in greed territory. Now you are officially in neutral. Market momentum is extreme greed. Stock price strength is fear. Stock price breadth is fear. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand is fear. And junk bond demand also in fear. Percent of stocks trading above their 50-day moving average today is up 0.5% to about 62%. And again, you're kind of just trading in this range. And for everyone that says markets are just too euphoric right now, that there's too much animal spirits out there, I really just don't agree with that, because you're not seeing the froth that you would typically expect to see when a frothy market is coming to an end. You're just not there yet. And I think there's a lot of room for a continued market rally, at least from an internals perspective. I think you're going to get some push and pull between big tech and the rest of the markets, right? Big tech having that market weighting in the S&P. I don't think big tech's going to continue just to run and increase the S&P's multiple. That doesn't look likely to me. But to see the broader markets kind of rally to catch up with what big tech has already done over the past 2 years could be in the cards. And I think Tesla is included in what could be that catch-up trade, that broadening trade that I expect will happen in December, but we'll talk about that a little bit more in the next video. And as we talked about previously, sentiment sharply rose for the bulls in this past week. You were at a 1-year high for bears on November 27th, and that just completely plummeted from bearish investors being 38.6% down to 30.7%. Neutral investors dropped from 24.3% down to 21.0%. And bullish investors skyrocketed from 37.1% to 48.3%. So the bears look like they're kind of going back into their bear caves for hibernation. At least that's what it looks like from the AI investor sentiment survey. Global inventory numbers for the Tesla lineup does show a little bit of a spike here for the Model Y at about 8,800 vehicles in total global inventories, the Model 3 at about 3,800, the Model X at 3,600, and the Model S at 2,400. And Tesla inventories look good, especially relative to the rest of your, auto companies sitting at multi-year high levels for inventories. That's not a problem necessarily for Tesla at this point. Tesla continues to run about 5,000 different ads with Google. And if we look at Tesla from a technical basis, you are finally getting to overbought levels, just barely, with the RSI at 70.13. This is not usually when you want to fade a rally in Tesla. When you get overbought on the RSI, you tend to continue to rally from there. Almost never do you get rejected at that 70 level on the RSI. A lot of the time you can run into the 80s, 85, 86 is really not uncommon for the RSI. And I do think, I mean, I don't want to make too many bold predictions here because I do all the time, but I do think this latest jobs report today paves the way for Tesla and the broader markets to really move higher into year end. As you have gotten that fear catalyst out of the way, the next big fear catalyst is going to be Jerome Powell on December 18th. But as per what the markets are pricing in, the Fed's going to cut December 18th. We already know they're going to kind of be on a pause, if you will, and just wait and see how the data comes out. So I don't think that's going to come to markets as a big surprise. All in all, you want to watch this trend line here. If we do come down, then you're likely going to come down to this trend line, which would be somewhere in the neighborhood of about $355 per share. You're currently $374 per share. I think it's likely Tesla breaks out into the 400s by the start of 2025. And at that point, we can probably expect to get a correction in Q1 2025. At least that is my expectation. But I do think we rally further from here before we do get that inevitable market-wide correction. So just my thoughts. Let me know what you guys think about this down below in the comment section. That is it for this video. There's actually not too much news today, so we'll keep this one short, sweet, and straight to the point. I think it's just really the jobs report that is moving markets today. So again, let me know what you guys think about this down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.